Hello and welcome to this important video. We had some turbulent times yesterday. Tesla fell 9%, more than it should fall. Nasdaq was down, the markets were down. There was a little panic. I wouldn't call it panic, but there was clearly a big down day in the markets. Tesla got punished beyond its normal beta, right? So there was a lot of news coming out about, Europe and January sales looking horrible for Tesla in Europe. So again, we are entering this phase of extreme fear, uncertainty, and doubt. And I thought this is exactly the right time to exit the technical, and tactical talk about the stock and jump into something very fundamental. And I want to share the latest of my financial model of Tesla. As you know, I think Tesla will be around 11,000 in the year 2030, which is not too far out, 5 years. And I want to help translate that into what I call the fair value model. So it allows us to determine what is the true intrinsic value of Tesla today and tomorrow and in March and in April and in May. So we actually derive from a real financial model, discounted cash flow model, the actual share price that is the fair value of Tesla for each month of the year. And I think that can be very helpful to put things into perspective so we know where the stock actually has to be intrinsically. And we can then derive a differential or delta to the current stock price to understand, is it very cheap? Is it ridiculously cheap? Or is it overvalued? So let me share the model and we can jump right into that pretty exciting exercise that I promise you will give you a much better perspective of what's to come. So I will start with a big picture introduction to my model. There is all kinds of inputs here. We don't have the time today to go through all the inputs, but if you know anything about financial modeling, you also know, I learned this early on, actually in university when we ran through a business simulation. And what I learned is all the little metrics like margin and OpEx and how much dollar per mile do you actually charge for Robotaxi, all these things are fine, but there's only one thing that truly matters, and that is demand. Demand determines revenue, and revenue determines your future. And the revenue estimation needs to be conservative but realistic to actually tell you what's going on. And I'm going to go quickly through the assumptions on the revenue and demand side. So, as you know, Tesla has 3 major revenue streams in the future that determines its future. The basis of this model is a discounted cash flow model. I'm taking a very conservative approach and say the value of a company today, it's this 10-year discounted cash flow. So you should pay exactly the amount for any given company that it makes you in cash flow over the next 10 years. That is why price to earnings doesn't matter. That is why nothing else matters. The only thing that matters is how much money is this thing going to make you, right? And if a company is a startup like Tesla actually is, because it starts up 2 totally new revenue streams that are enormous, you can't value it on price earnings because the earnings are in the future. So the 3 central components of Tesla is its core EV and energy business. It is its robo fleet and robotaxi business, and its Optimus humanoid robot business. These are the 3 strategic income streams. All other more small tactical income streams can be assigned to each of them. For example, FSD subscription sales, I would put into the core model. The core business doesn't matter, they're marginal compared to other stuff. How does it look like? For the core business, I'm just assuming a 20% year-over-year growth in perpetuity. So right now we produced 1.8 million cars last year. We will produce 2.2 million this year, 2.6 million next year, and so on. Obviously, that's not completely accurate. We might produce maybe around here. Then we see a bigger boost maybe in 2026 with all the affordable models. So maybe they hit 3 million then, but then they slow down, blah, blah, blah. It doesn't matter. The average approximate 20%. As we also see, the core business is not that important for the future. It's very important for now, but it's not the key driver of this discounted cash flow model. Now, the robotaxi fleet here, it becomes very, very important. These assumptions that you and me are on the same page, or you can think that I'm too crazy, too bullish, or too bearish. So my assumption is we will have 500 robotaxis in commercial use in 2025. I think that's kind of conservative, could be easily way more, but it doesn't matter. In 2026, I assume 10,000 active robotaxis on the roads. I assume that 100% growth through 2027, 20,000 on the road. For comparison, Uber has 5 million drivers in the US. So we have 20,000 robotaxis 2027. You can see I understand how complicated this rollout is, and I'm not going crazy here. Then we have a big leap to 2028 because I assume by then we have high maturity. We actually understand all that stuff. They scale to 100,000, and from there they scale 250%, 200%, 100%, 90%, and goes down. That gives us quickly a larger fleet, and we will hit an Uber-sized fleet, but this is globally, around 2033 with 7 million robotaxis deployed. Now, long term, I think robotaxis go way higher than people think. I assume a install base of 219 million robotaxis by 2040. Because, and that's the growth rate you see actually here, that's the magic of compounding returns. The growth rate actually goes down from 250% here, right? Growing install base of 350,000 to 1 million by 2030. So 2030, 1 million robotaxis, which is actually more aggressive here. And then continuing, right? But the growth rate goes down, 90%, 85. So I assume declining growth rates. But because the install base is so big, this actually adds up. Now, is it realistic to have 200 million robotaxis on the road in 2040, which we don't even know how the world looks like then? I think yes, right? You have 1.5 billion cars deployed without buses. Robotaxis will replace everything, including buses. So you can easily have billions, 2 billion, 3 billion robotaxis, in my opinion. 220 million is pretty conservative for the far distant future. And once this works and you have super cheap robotaxi hardware, this will scale like insane and replace all public transportation. It will replace everything. Because it's just, if you look at the economics, it's just a completely superior model, especially at low cost. But we don't have to worry about that. The current price doesn't even take 2040 into consideration because it's a 10-year discounted cash flow model. So we are actually ending the model here at 23 million deployed by 2035. And I wanted to just share some of these numbers so you see, the 10-year numbers look maybe aggressive, 20 million, even though that's not that aggressive, 2035. But you see that the tactical short-term numbers are very, very conservative. 10,000 robotaxis in 2026. I don't think that's easy, but it's also not impossible. So there you have it. Now, Optimus, right? This is the biggest one. I assume 0 Optimus commercially deployed this year. So that's clearly conservative. Next year, I assume 10,000 Optimus commercially deployed. Now, is that realistic? I think so. We will have pilots. We will have all kinds of stuff. And then I assume 100,000 in 2027. And I had a lot of discussions here with very smart people. This number is where people get a little skeptical about my projections. Really, 100,000 Optimus and then 300,000 Optimus in 2028, nearly a million by 2029, and nearly 3 million by 2030. Is that realistic? Because the argument is, well, we have some way to go. Even Joe Bhakti says it's going to take 6 years before physical labor is fully replaceable with Optimus robots. So that's 2031. But I make one argument that is very, very important with Optimus. Why I think they get a short-term boost before complete readiness. With complete readiness, I mean around the year 2030, Optimus will be able to replace all physical labor, latest in 2031. And then it's off to the races. That's why these things scale dramatically, right? To an install base in my projections of roughly 3.5 billion robots deployed by 2040. Optimus robots. That assumes that Tesla will have a major, major market share here, which is a different discussion. The skepticism of informed people is not the 3.5 billion by 2040. That's actually very reasonable because the forcing function in business will be insane. Skepticism is more in the very beginning. Can we really sell 100,000 humanoid robots in 2027? Can we really do that? Can we really sell 900,000 to an install base of 1.3 million total by 2029? My argument is, well, there is one big hack that Elon has that we all overlook. And that big hack is that you can sell, in my opinion, many hundreds of thousands, if not millions of these Optimus robots to private consumers if you're Elon. How many rich people are going to drop $30,000 for a humanoid robot? I tell you, 1 million. If you put Optimus end of 2026, when it's really functional and cool, up for sale, you will pre-sell 1 million at $30,000, maybe even $40,000 to private citizens with $5,000 down. I guarantee you. And that is a great hack to kickstart that, because you do not need massive commercial demand before 2030. And in 2030, you will have massive commercial demand. So I'm very bullish. And this is more the Robotaxis, as you can tell, I'm more on the conservative side. On Optimus, I'm a little more aggressive, but I'm very sure I'm right about this. Okay, how does it all translate into the stock price? Let's skip all the revenue projections here, but basically, or I show you the DCF models very quickly. We have basically here the discounted cash flow of Tesla. So Tesla in 2024, end of the year, according to these projections, was a $1.4 trillion company. Today it's at 950 billion because it dropped so much. So we are below the 2024 fair value. End of 2025, the cash flows just projected into today at a certain discount rate are at 2.5 trillion. So that's 2.5x over where the stock is right now, and so on. And then you see massive growth all the way to a $50 trillion company in 2030. Now, before we jump into the monthly projections, I have a discounted model, a double discounted model. So you have discounted cash flow based on an interest rate and discount rate, where you discount more future, more far out revenue more, right? This is like a simple formula that is based on an interest assumption. So if I give you, for the next 10 years a certain revenue stream, you're not paying me the sum of the annual revenues, you're paying me less, because basically the last year in 10 years, imagine I promise you $1 million in 10 years. How much are you going to pay me for that $1 million in 10 years? The answer is not $1 million, right? You discount it by an interest rate. You say like, well, I'm going to pay you discounted by 10% or 7%, whatever. That's what I pay you today. So I might pay you 750,000 for 1 million in 10 years, something like that. That is the discount rate for DCF models. On top of that, I put a risk discount rate that is calculated here through the risk inputs, where I basically say, what are the odds that this is not happening? What's the competitive risk, key man risk of Elon getting hurt or whatever, technology risk that something doesn't work in time, product and demand risk that someone is not going to pay or buy it, and political regulatory risk in both instances. And this adds up to very significant risk discounts. So Optimus is discounted by 32%, Robotaxi by 29%. That's my current risk discounts. And that informs the final future value of the company. Basically saying here's the raw value, 1.4 trillion, but the discounted value is 1.1 trillion. Or for 2025, non-discounted value of all the future discounted cash flows is 2.5 trillion. But when we discount it by the risk that we are taking here, we are at roughly 2 trillion, right? This is then translated into the share price right here. And that's what all of you want to know. So let's skip the raw share price and go right to what matters. You see the future discounted value share price. I will highlight this for you right now. And here is what we see, right? And here is where the rubber hits the road, no pun intended. And we know what the share price is. So end of 2024, the fair value share price was 355. One of the Tesla tubers who said 350 was the great Peggy. So Peggy nailed it. He said 350. That was not my price prediction, but it was my fair value share price, what it should be, right? And then we have the all decisive share price for 2025. So the fair value discounted, risk discounted share price of Tesla is 611. Right? That is and that changes every week or month because I'm adjusting the risks. Sometimes I also adjust the projections, but not that often. That stays pretty stable right now, but the risk is going up or down. So here you have the magic number, 611. So I believe Tesla should be end of 2025, based on these discounted cash flows, conservatively at 611 if we keep the projections as they are. We might accelerate them, decelerate them, but right now I'm thinking they're pretty accurate. Now, let's get to the interesting meat. Why I turned that into a new model that I want to share with you that helps us to understand month by month what the fair value is, and I will explain in a second why this is so interesting. So all I did here is basically saying you have the fair value here, right? For January, the fair value is 355, which is end of 2024. I made it simple. And then in the end, you have the actual fair value for end of 2025, which is 611. And all I did was I assumed linear progress, which is not the best assumption, but it's the most reasonable. And I simply project the differential from end of 2024 to end of 2025 into monthly increments. And what you see here is the actual fair value of Tesla's share price. It's a magic model. And it tells you in February, Tesla should be at 379. Well, it is at 305 right now, I guess, something like that. In March, it should be at 402. In April, it should be at 425, and so on and so forth. And that's how we end up at 611 in December. Now, this model allows us to play around a little bit. So we can play around here by entering what actually happens or what we believe is going to happen. And I put this into different scenario analyses here. Here's what I think is most likely to happen, actually. But now we are entering the realm of the speculative. So far, we have been in the realm of financial modeling with very reasonable and thought through assumptions. Now I'm starting to speculate a little bit. And what you see here on the left is the actual stock price scenario compared to the fair value of the stock. And what you see down here is your discount that you're getting. So if that blue bar for each month is positive, you're getting free money. You're getting a discount to the fair value. If it's negative, you are overpaying to what it's actually worth. And what we see in reality is that these stock prices, they actually are being forced to that red line. Sooner or later, you need to hit the red line. If you go too much up, you have to drop down. If you stay too much down here, you have to go up. Sometimes they go in circles, but in Tesla, there's a lot of synthetic and artificial suppression. So sometimes it just stays flat and is being forced in a vertical line up, which happened in 2020, which could happen this year, depending on how it goes. So let's speculate around. So in February, actually, we saw a lot of suppression of the stock price. So we're ending up here at 303, right? Now, we don't know what happens in March. We don't know what happens in April. But we know that in June, there will be Robotaxi launch. And I think the most likely situation where you see the stock being forced towards that fair value could potentially happen in July and August. And what we also know historically, once it's on a run up, it might overshoot. So as I mentioned multiple times on X, I think it's more likely if Robotaxi launch works according to plan, which who knows, I think there's a 30% chance it launches in time and goes perfectly, or sufficiently perfectly. It scales, it destroys Uber in Austin. You see the impact on Uber demand that goes down. Everyone is happy, no major accidents. Cybercaps are rolling around. If that all happens by July and August, I think the stock is very likely to go above 600, which, by the way, will be overvaluing Tesla according to my model, at least in the short term. And that's why if that happens, you see this blue bar dropping negative and say, well, you're technically overpaying. You should be a little cautious. And then I assume a little crash of the market in H2, right, in September, October, which also drops Tesla. These are all total speculations, just for fun to have this yellow line. And then you might get here a positive premium again, discount of Tesla shares. So I'm playing around with these models to anticipate, but the red line is the important line. There's also a scenario of continued, suppression of the stock where we get delayed and this thing stays down here all the time, right? It doesn't go up. Maybe the launch gets delayed, which leads to a terrible, crash down here to 250, whatever, in May and June when this becomes known. And what you see is you get giant discounts because that delay, depending what it exactly is, but if it's just a few months or a quarter, it means nothing for the projections. And then you get into these huge discounts. So I didn't prepare very sophisticated scenarios here. I just want to show how I think about this. And what you need to understand is this red line. The red line is our reference point. And right now it might sound crazy to some people. Oh, this is way too high, Joe, whatever. There will come times very soon where I'm the conservative guy. I tell everyone, I told you my red line. Now we're at 600. We should be at 511. We are in a risk phase where we will get hammered. This happened already in December, right? We were too high. I'm not saying that I perfectly trade all these things. I made my mistakes too, even though I knew it's overvalued in December, but I wasn't able to execute to the extent I wanted to. I got creamed like everyone else, a little bit at least. So I'm not saying I'm perfect in execution, but I'm often perfect in prediction. I wanted to share this model. I think it can be very helpful. I will share these things to remind everyone, are we in a heavy discount here? Or do we pay a premium right now? And I think it's going to be a very exciting year, and it's going to be very exciting next couple of months, next 5 months. Robotaxi is coming. Crazy things are happening. We have reached a very high level of FUD right now, which is good for discounts. So let's see what happens and see you very soon.